Volodymyr, it's great to see you today.
Very nice seeing you too, Jason.
Volodymyr, so you teach at Indiana University, you follow global economics, you're a professor of economics. What's going on right now with one of the world's largest economies, China?
Right. So Chinese economy is the second largest economy in the world. It is very important also because it's the largest exporter in the world, right? And in the context of Ukraine and Russia, it's also very important because it's probably the only partner which is capable of providing substantial economic help to Russia. China currently experiences its own problems, right? So it's on the verge of its own financial crisis. The reason for that, for a number of years now, they were pouring money into the local economy, and that was not supported by economics. That was supported by politics, right? So provincial leaders, their career depends on these statistics and reporting. And so they are trying to, build new houses, build new infrastructure, build the speed drain. And all of that is very expensive. And for a number of years, that was sustainable because there was this upward trend. And people would say, oh, it's expensive today. Tomorrow, it will be even more expensive. But finally reached the point when the trend got reversed. The real estate in China is now dropping in price. And so that caused a chain reaction such that lenders are not able to pay their debts. And so companies are going bankrupt, right? So there is a lot of property which is not used. There are even videos circulating that they're exploding these multi-thousand properties just because maintaining them is too costly. So all of that kind of results in blow to Chinese economy, right? So there are also other factors, other indicators. The youth economy is over 20%, and Chinese government even stopped publishing the statistics, right? So many people want to leave, and many people there, like millions and millions of people, have to survive on monthly pension of $20 to $25, right? And so that becomes increasingly difficult. So because of all of that, China is actually even more dependent now on its exports, which is also decreasing for various factors. And that's why it would be a bit suicidal for them, to completely have bad relationships with the collective West. So they do depend on that. And part of that is also they face these economic problems. B, they don't want to have this conflict with the United States and other countries. So that limits seriously their ability to support Russia, right? So from their own perspective, it would be very bad investment to start helping Russia, A, because they are lacking resources, B, because it will be triggering reaction from the West and will be worsening their situation even more.
That's really interesting. But the Chinese economy is huge, and even though it has debt, how much debt are we talking about relative, for instance, to the United States?
So Chinese debt exceeds that of the United States, even their GDP is somewhat lower than that of the United States, right? So if you think about ratio to GDP, Chinese debt is now 250% to the GDP, whereas for United States, and many people are alarmed also by that figure, it's only 120%, right? And let's not forget that US is a global economy with many countries trying to, invest in the United States, and United States keeps its borrowing denominated in dollar, and so it can also regulate the exchange rate. So it has many more abilities to manage and to handle that. So in China, it's different, and situation is especially grim for local debt by local governments. So that one is estimated recently by Goldman Sachs to be 23%, right? And so these guys just pour a significant amount of their annual revenues just to cover the interest rate for that, right? And they have very little hope to recover that, because what they were hoping for is that the real estate will grow in prices, they'll be able to sell it, they'll be able to tax it, and that's how they would return all these debts. Now that situation has reversed, the real estate prices are going down, there is a decreased demand for that, and many borrowers refuse to pay their loans. They don't have hopes for that, so there is very difficult situation, especially in some provinces which are not as rich as the coastal ones.
So for Russia, for instance, which, as you know, is struggling to have foreign currency, it's trying to maintain the ruble. What would it mean if they can't buy any more foreign currency? They have been trying to buy lots of Chinese yuan before. If they can no longer do so, what does this mean for the Russian ruble or the Russian economy?
Yeah, so we are talking about, Chinese economy, and so yuan is kind of losing a little bit in terms of the exchange rate, but it's still globally fairly demanded currency because there are many goods and services which China can potentially provide to other countries, right? So Russia cannot do that, and so Russia only relies on its exports of energy mainly, and buys everything else pretty much, right? And so in that case, so as long as they can sell it at profitable price, so then their ruble might be demanded by some countries, right? So, but number of those countries decreases, right? And so China and India would be probably now the largest buyers. And so you probably know, right? So they were selling oil for like rupees for a while, but now they don't need anything to buy from India for these rupees, right? And so China doesn't want to buy rubles anymore because there is nothing much what they can buy from, Russia other than oil for rubles. And so that potentially has, serious consequences for ruble, so that its currency will not be demanded by anybody else other than for internal circulation in Russia. And that's why, its world price, whatever Russian central bank will be posting that, will be only valid within Russia, right? So it's kind of like fake price, which only works in some territory because nobody outside of Russia actually wants ruble. And so as soon as Russian consumers will understand that, and this understanding is pretty much already spread to a large extent, right? So then, of course, they will also try to avoid ruble and try to keep their savings in something else, right? So euros, dollars, if they can, get some other currencies, some other currencies.
Well, you don't sound very optimistic about the Russian economy. What sort of outlook do you have for it?
So for a number of years, right, so Russian economy was relying a lot on the exports of energy, right? And they had secured many buyers, so they had diversified markets. So they could sell it potentially at higher price because they had better bargaining power by selling to many buyers. So now that circle is much smaller, they're losing bargaining power. And so now we have this buyer's power, right? So those who buy from Russia can buy a discount because sales of oil are sanctioned by Western countries. So that's a bad factor. And internally, even oil sector is dependent on many critical inputs, which traditionally were imported from Western countries. And many of those goods are being now sanctioned. And some other goods which are not sanctioned, so there may be some leakages in sanctions, they're getting to Russia at much higher price, right? So then all these factors combined make Russian costs higher and their revenues lower, right? And now also if Chinese economy will be shrinking and will be experiencing some kind of recession, that would also greatly decrease demand for Russian energy, and that would decrease the price even more.
That's fantastic. Well, Professor, I appreciate your time today. Thank you.
You're very welcome. Thanks.